All right. Good morning, everybody. It's Tuesday. So your favorite hosts, Tim and Tim, we're back for another fun episode in making moves in multifamily. Tim, how you doing today, man? It looks like we got the Brown memo. We didn't coordinate this. So
Yeah, yeah, yeah. Well, you know
different
what? I
shirt
think
though, same color.
I think we're just I think we've been doing things long enough now that it's just starting to happen, right? Like,
Yeah. And for those that didn't know, my man Tim Vest, his birthday was on Sunday. So remember the 5th of November for you English folk out there.
well, I like it. I like it.
Yeah, yeah. My
I
mother-in-law's from Great Britain, so I know those things.
and little quick story here. This is kind of funny. And a little shout out to Vitali here. So I'm gone all weekend. I come back. There's a package waiting for me at the front door. And it's in this box. And my wife just assumes I've purchased a pair of shoes because it looks like a shoe box. And so I thought she ordered. Anyway, long story short, it sat on the counter for like half the day. And then finally I was like, well, what is this? So open it up. It's a big ass box of like 140 York peppermint patties.
175.
175. There we go.
Yeah.
And and my wife and I are looking at each other. We're like, "Did you order this? I didn't order this. Did you order this? I didn't order this." And we do. We keep peppermint patties in the fridge around here. And and then I was like, "Oh, wait a minute. There's something in the package." And I pull it out. Vitali and I were on a business trip recently, and we were standing in a convenience store. He's like, "What are you looking for?" I was like, "Man, I want a York peppermint patty," and they didn't have any in the store.
Yeah.
and and he's like, "Really? You like those things?" Like, yeah, just every once in a while. so,
So yeah,
so
I was looking for like a gag gift, and I was like, let me find the biggest box of York patties I can possibly find. And I was like,
yeah,
I think 175 will do.
yeah. So between my wife and I, we eat like two a week.
Yeah.
So that'll last a while.
Well,
So
happy
appreciate it.
birthday. I know those gag gifts are sometimes those are the best. So
Oh, dude, it was
oh yeah,
awesome.
and
And
last year I got you those AirPods, and you were like, "My daughter keeps taking mine," so I had them engraved with your name on it, and you didn't even realize it for a year later.
yeah, guys, good. Yeah, he gives me an incredible gift, and I actually lied to him, unknowingly lied to him. He's like, "Did you ever use those?" I'm like, "Yeah, I got them. I'm using them." And then I don't know what, like a month ago, month and a half ago.
When we were at the same convenience store.
Yeah, my daughter had walked into my office, neat her AirPods had died, and she's like, "I want AirPods." And I'm like, "Well, I think I got some." And I thought I'd already opened the ones and was using the ones Vitaly had given me. And I opened this box and she's like, "Dad, it has your name engraved on it. I don't want that." And I'm like, "Oh crap." I'm like, these are the ones Tim gave me.
Yeah.
um,
So I don't
so
know. All
anyway,
right. So happy birthday. And it looks like a lot of
thank
people are saying happy birthday in the comments.
thanks,
Next year's
folks.
the big year, so we'll have to do something fun. But the way that we're going to be able to do something fun next year is going to be all supported by the show topic today. Well, I don't know what is this Guy Faux Day? Faux Guy Faux Day?
I don't know.
I don't know how to pronounce that. FAU. I think it's faux.
Yeah, but either way, his wife has to be an amazing person. That's all I
Uh,
got. So
all right, all right. So, the way that we're going to be able to go on these fun trips and do things that we want to do for our birthdays and send people gifts because we like to is by going where the yield is. The movie V for Vendetta.
ah,
That's I haven't seen that in a while. It's been a minute. All right, so in something that Tim and I we preach all the time, and it is very, very important and relative to newer investors, is to draw a 2 to 4 hour circle around where you live, and that should be kind of where you start targeting your first assets. Getting to know the market, getting to know the brokers and the investors and the other people that are doing deals in your area. Um, Luckily for us, we live in the Carolinas. 4 hours around Charlotte basically gets you all the way up to what Richmond, Virginia area, down to
yeah,
Atlanta, Georgia, and over to Knoxville, Tennessee. I mean, the area is enormous. I mean, there's
yeah,
so many great markets in that 4 hour radius, right? So we're not limited to deals, right? We're not limited to deals, but there comes a point in time in your investing life where You have exhausted a lot. And I hesitate to say exhausted all resources because I don't think that that's physically possible. But your access to deals at some point in time will get limited based on the market cycle, much like how it is today.
Yeah.
Cap rates are going to continue to compress. More and more and more money are going to continue to go into your markets, looking for safe havens to park cash. And I know that I just said that the cap rates are going to continue to compress, but the other part of it is like there's a ton of buyers, there's a lot of demand. There might not be enough opportunity on the market, and if there's opportunity in the market, it might not make sense for you because it doesn't meet your investor returns. So there's a lot of things that go into that, right? So just bear with me here. When you get to that point in your career where you're like, man, I have talked to all the brokers that I know, and they all know that I'm looking for another asset, and nobody's got anything that works for me. What do you do? Tim, what do you do there?
I start looking. I start looking under the in between the cracks. Honestly, I mean, for lack of a better term, guys. I'm going to take it back to one practical example, right? Like when things were going so crazy in 2020 and 2021, and I couldn't buy in Raleigh or Charlotte. What did I do? We started to look at some of the smaller areas in between, right? We started to look in the places that weren't quite as crazy that maybe other people weren't looking, right? Is that kind of what you were going for?
I thought, well, I was kind of, playing the slow game here, and I was like, oh, I'm just gonna roll up and quit now that there's no deals coming to my doorstep, and that's the wrong answer, right? You got to do what Tim Vest said. You got to start looking in the cracks. You got to look at the little markets around the big markets, in between the big markets. However, there's one in particular that deals keep coming to me, and I just don't want them. Is Orangeburg, South Carolina? That place won't go away. I can't seem to get away from that place, but everyone keeps sending me stuff from there. But John and John, still appreciate you sending me stuff. You got to look for deals, right? You got to continue to look for yield, and yield might not be in your big name cities. It might not be in your Columbias, your
Yeah.
Charlottes, your Raleighs, your Charlestons. It might be in your places like Greenwood. It might be in your places like what's the place north of Columbia is Lugoff. It
Lugoff.
might be in Florence, South Carolina. It might be in smaller towns in North Carolina, like Boone instead of Asheville, or Bryson City instead of Asheville. I mean, there's so many little markets out there that have a ton of booming opportunity. And I know that when you start looking at deals, you're not going to get as favorable lending opportunities in those markets. But I like to say that underwriting for these real estate deals is just like algebra, right? You're solving for investor returns instead of X. And if you know what all your levers are going to be for any given market, right? For your insurance rates, for your, the biggest thing people are always going to challenge me on is the leverage. Oh, I'm not going to be able to get good leverage in a market like that. Okay, well, underwrite the deal to the leverage that you can get and then adjust your price accordingly in order to get where you need to be. That's it. That's not that hard. The other lever that you can pull is what if you can offer some level of seller financing? If you can get, 250 or $500,000 of seller financing at a very low interest rate, what does that do for your cost of capital? What does that look like your equity returns for the investors that are investing in the equity pieces of the
Yeah.
deal?
Yeah.
Go ahead.
No, I was just going to say, really good point. Yeah, because if you know what you're like when you're doing the syndication stuff, or I mean, forget syndication sometimes. So, like, even if you're just doing stuff with you and another partner, you know what your returns need to be. Exactly what Tim is saying there is start where your returns need to be and work backwards to that, right? Like, what does the purchase price need to be to get you there?
Right.
Um,
What are the levers? What are the
right.
levers that you can pull in order to get you where you need to go? But funny enough, we had this conversation. God, what was it now? Like 2 months ago, maybe 3 months ago, with our friend and mentor, and he had presented an opportunity to us, and I immediately was like, nope, not even look, not you can't change my mind. And he challenged us, and he literally said the same thing that the show title, right? He was like, "You got to go where the yield is," and we're like, "What are you talking about?" He goes, "Well, if you can't buy any deals in your market and you need to deploy money, right? If you haven't, potentially you're working with a fund, or potentially you just sold an asset, and your investors are like, Tim, where are you going to put our money? Right? You got to have something to go ahead and buy." as you start to grow out of this little kind of safe cocoon of doing deals only in a specific location, you're able to grow and grow and grow and kind of expand where you're operating at. And that is critically important to understand, that you need to have a niche. I'm not saying that you can go buy class A buildings in Charlotte and then go do value add properties in the middle of nowhere Midwest just because you can get more yield there. That's not your asset, right? That's not your skill set. Your skill set, you got to stay with your skill set, right? I mean, Tim and I focus a lot on LIHTC stuff, a lot of affordable housing, Section 8 based housing, things like that. So we're not going to go to some other market and then try to chase a completely different asset class with a completely different business plan. We're going to take our tried and proven systems and processes, and we're going to take them from one market to the next and continue to grow as long as we have the ability to do so. And if there's yield, the investors are going to be happy and you're going to be happy and everybody's making money. And what does everyone like to say? Real estate markets are cyclical. So you got to go when the going's good, and you got to get out when the going's not good. And you got to move to another market where the going is good, right? I like to reference the book down here. This one. I reference this book all the time. Emerging Real Estate Markets by David Lindell. If you haven't read this book, go ahead and read it. That is a lot of basis on the principle that why we look in other markets and when we do, right? It's because they're cyclical and things change in the markets that you're currently operating in. And if you want to continue to grow, you got to look outside your comfort zone. And everyone knows most amount of growth comes outside of your comfort zone. And I know that's a super cliche saying, but it's applicable here.
Yeah. Yeah. And guys, don't be afraid. If you know the area, don't be afraid to look in a place that's got 17,000 residents, right? 30,000 residents, whatever. It really comes down to what's the fundamentals in the market. Tim mentioned one earlier, Greenwood. A lot of people would write that market off. They wouldn't even visit it, right? They wouldn't even go there.
And hey, let's in the spirit of full honesty and transparency, let's be honest here. What were our original reactions to Greenwood?
My original reaction was probably not, right? But
Yeah.
but to be fair, right? Like when the opportunity presented itself, it's like probably not, but I'll drive by it, right?
I'm
I'll
at
drive by
least open to looking,
it, right?
but it's not my preference, I think is
Right.
a good way to say it.
And then you drive into the town and you realize, and here's like some things you look for, right? And it makes you dig a little bit further. You drive into the town and you realize town's got 2 Chick-fil-A's. It's got a brand new Popeyes. And you start to notice some other things in the town that you're like,
A couple of
these,
Starbucks.
yeah, these businesses don't move to dying areas
And they
typically.
were new buildings too, like
Right.
recently within the last 3 years.
Yeah, well, the Popeyes had a now open sign on it.
Oh, yeah,
So
yeah.
it's like, okay. So then you drive the asset. It looks pretty attractive. And then you go back to your office and you're like, what's going on in that town? Right. And you start to realize, hey, in this particular town, there's 2 foreign companies, one in Japan, one in I think Switzerland, or Sweden. I always get those 2 mixed up. Apologize to anybody for that one. But it's these 2 foreign companies that have set up manufacturing locations there and heavily invested in those locations. And then you start to dig a little bit more and you realize, hey, this is actually a strong blue collar town here. This is a good market. It's got the tenant base I'm looking for. So and then you start to realize, okay, this is an area that I want to look. And this is what we really did back in 2020 and 2021, like we talked about, like when all the big institutional money was flowing out of the Northeast into the Carolinas and targeting places like Raleigh, Charlotte to some, and Greenville, South Carolina to some respect, Greensboro, North Carolina. We started to look in between. We started to look in High Point. We started to look in Lancaster. Tim mentioned Columbia, South Carolina before. We started to look in those little areas in between, and that's where we really kind of started to find deals. Right, it was areas that had good fundamentals that most out of state folks didn't know about.
Yeah, what's funny is oh God, I lost my train of thought there. So somebody had asked me recently, they were like, Tim, now that you're, more established and you've been doing deals for a while and you've got a lot of deal flow, they're like, how many deals do you actually have to underwrite before you get a deal? And I talked to them. I was like, this might sound like I'm boasting or bragging, but I'll tell you, we don't really look at a deal unless it's brought to us by a handful of people. And if they bring us that deal, we know it's going to work. So I was like, I'll give us a little margin of error here, but I'm going to say, I would say 80% of the deals that are brought to us now are deals that we buy and close on. So I don't spin my wheels spending a ton of time underwriting deals and building relationships because Tim Best did all the relationship building already. We're capitalizing on that now, and we're using our efficiencies and operations in order to keep them, the locomotive going. But our focus has now changed, right? So that question came to me from somebody that was very new in their journey. And I was like, when I was in your spot, I was underwriting 100, 200 deals,
Yeah.
right? Before I found something that even came close to making sense. But a lot of it was my own learning and understanding of how deals actually operate because I was brainwashed with this theory that all deals need to be underwritten at a 50% expense ratio, which is simply not true. It just takes, ratios are exactly ratios. As the top number goes up and the bottom number stays stable, the ratio goes down, right? So rents and expenses and fixed costs versus variable costs. There's so much stuff that goes into underwriting. You can't just take this blanket statement of I'm going to increase my rents and I'm going to do a 50% expense ratio and that's what my number is going to be. Well, I can guarantee you're probably never going to get a deal at that rate because that's just not how it simply works. But it took me a long time in order to really learn that and understand it and learn how to implement it. So I think that we're in a different kind of space right now. And it's a good space, right? Because we've built a lot of solid relationships up and we're capitalizing on those now. But now our time and energy is not focused on building those relationships and learning how to underwrite and underwriting every single deal and trying to make 5 offers a week. I mean, we've gone through that process already. Now it's like, okay, well, how do we strengthen these relationships that we have and continue to do these deals? Because it gets kind of easy, right? At that point, you're just like, all right, here's the next one. Here's the next one. And it just turns
Yeah.
into this conveyor belt of deals because it's not like this argumentative, like this competition based, process like it used to be. So it's kind of like we're kind of in a bit of a different headspace.
Yeah, 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 for sure. And Tim brought up a really good point. Like when you're first starting, right? Yeah, you're going to underwrite a lot more, for sure. Like I had a conversation this past week with a guy who's been doing this a long time, and we were actually talking about the underwriting process. And I actually asked him, I was like, "How long does it take you? How many deals show up in your inbox every week?" And I don't remember exactly what he said, but it was something to the respect of like 40. You just call it 40 a week. And I was like, how long does it take you to get through those? And he's like, maybe 45 minutes to get through 40. Right. And because he's been doing this a long time and he can just look at, a couple of things. He's like, nope, 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 nope. Okay, maybe I'm gonna dig into this one. Nope, 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 nope. You get a lot faster, right? And he's kind of in that space where he knows what he's looking for. He knows who to pay attention to when something comes across his plate, kind of like what Tim's talking about. So you may like I still get a lot of stuff, but exactly what Tim's talking about, I know which ones to pay attention to now. And I know which ones to kind of say, maybe if I have a little bit of time, I'll come back to this later. Because you never know when there's like a really nice needle in the haystack, right? But like, there's certain, I'm not going to call anybody out, but there's just certain firms, certain folks that send things across that over the last 3 years, I'm like,
Yeah.
they're that just doesn't work. I haven't seen anything from them in 3 years that works, so I'm probably not going to pay attention to it.
Mhm.
Um, but when I
It's
was
like
first,
I like to think of it as the boy that cried wolf.
but
You know,
when I was
yeah, I got a great
really,
deal. I got a great deal. I got a great deal for years. I got a great deal. Not one of them was a great deal. So now you come to me and you say you got a great deal, and I'm just gonna be like, I don't think so. Don't waste my
yeah,
time.
and just so you know, like when like Tim was talking about when I first started, if nothing else, just to get practice, I still have the folder on my computer of the first like 6 months, year
Mhm,
that I was doing deals. And I mean, hundreds of underwriting files in there. Um,
mhm.
Literally, I mean, I'm not kidding. And I was underwriting everything, anywhere. Um, and just to see, right? Like I didn't know and I wanted to learn and I wanted to, be able to get a little bit faster at it. So practice, practice, practice was more than anything is what I was going for. Um, but yeah, you are Tim is right, like the boy that cried wolf, right? Like, um, I I have a guy that I have a pretty good relationship with, and he went from independent to another large brokerage firm recently, and when he went, I was like, man, congratulations. I don't know that we're going to be able to do much together moving forward, just because I know what that firm's criteria are, and they just don't meet mine, right? So it's like you're gonna learn as you go through this which ones to pay attention to, and that's really gonna streamline your process for you.
Yeah, and somebody's buying deals from these big brokerages, not
Sure.
us, but somebody is. I mean, that's how they stay in business. And we know quite a few people that get deals from these big guys, but they have a different relationship than we do
Yeah.
with those brokers. They're getting the ones that are actually worth something that, they're able to do something with those. And good for them. I'm glad. Everybody's got to make, there's enough opportunity out there for everybody, but it
Oh
just
yeah.
doesn't work for us. And that's okay too.
Yeah. Yeah. For sure. And I heard it said, same guy last week, right? Like you're talking about enough opportunity. Somebody asked him, it was like, how when's the escalator stop, or when's the conveyor belt stop? He's like, the number of deals out there are endless. He's like,
Yeah.
yeah, there's always deals. And
We're a
and it
bunch of
was just
junkies.
but it was just interesting to hear somebody else say that, right? Like, hey man, you got some more of them deals. Um,
This is the 5 o'clock crack house giveaway. Got any
but
more of them deals?
it's just interesting to hear a guy that's been doing it as long as he has say,
Yeah.
dude, like the conveyor belt, like, what do you mean? It doesn't have to stop, right?
No.
So yeah, and keep that in mind, folks. There's plenty of deals out there for everybody.
Right.
I think if you keep that mindset too, you'll find yourself a lot more successful.
Yeah,
Um,
because especially when you don't have that mindset, you're just like, "Oh my god, I have to make every single deal that comes to me, I have to make it work." And that's just not true. I mean, you don't have to make every deal work. It's interesting, now that we've gotten to the point where we're selling a lot of deals too, and I've gotten these guys that reach out into me and they tell me what my deal's worth. And I'm like, no, it's worth that to you. But I know the buyer that I'm looking for, and I've identified the buyer that I'm looking for. And just because I have a property for sale that doesn't meet your criteria does not mean that it's not a good deal for somebody else.
right,
And it really took me to be on the other side of the table to fully understand that and not take it personally when somebody says, "Oh, you don't know what you're talking about. You're selling this deal. It's not worth that." Like, you're never going to get your price or whatever, which is, it's a buying tactic, right? Trying to beat people down or whatever, which I don't agree with because I'm non-confrontational. So, like, it's simply facts and data for me. And like at the end of the day, I'm just like, look, you're not my buyer. I'm looking for somebody that is looking for this criteria over this time frame with this type of money with this level of expectation of return. If you don't meet these things, this is not a good deal for you. But I can find buyers that are looking for these types of deals
yeah,
and sell them this deal.
yeah, yeah, and
Brokers, that's exactly how a broker thinks too. And kind of taking another step backwards was something we always also preach is knowing what your buy box is, right? Being able to clearly identify who you are, what you want to buy, what locations, what asset class, how much is it going to cost. Knowing all of those things and you going to the broker and saying, this is what I'm looking for, doesn't matter if there's 500 other people that have the same buying criteria. What he's doing is putting you in a bucket of this buying criteria versus a bucket of this buying criteria. And he's not going to
right,
waste his time sending you these class A new development deals that he knows you're not going to buy. It's not
yeah,
your criteria.
yeah, yeah, really good point. And guys, it all comes back to what the topic of this call was to begin with, right? Which is, go where the yield is. So know what your buy box is, but I would say also be open to the idea of showing you something a little bit different, right? Like what Vitali said. We sat down with somebody, and he was like, I think I have something you're gonna like, but
Ugh,
up to you, right? And
yeah.
and
Yeah.
at first it was like, no, no, no. And then
Nope.
we saw it and we're like, okay, yeah, yeah,
All
yeah, yeah.
right. All right. I'm fine. I'll take a look at it. When it looks this good, of course, tickle my fancy a little bit. Why don't you?
Yeah. And same thing. I had something recently happen again, similar kind of thing. It was like, I think you're gonna like it. So let's look at it. And yeah, we did. And it's really nice.
Somebody else did that with that new construction project that we bought. I would have
Oh
told you
yeah.
first thing, never a million years. There's no way we're gonna make new construction work on the numbers. Lo and behold, it did because they were like, you know what? I think you really should take a look at this. And
Yeah.
we did. We were open to it.
Yeah. And just recently we had some investors reach out to us and say, "Hey man, it's really nice to have a deal that's paying."
Oh,
Um,
I had Stephanie, if you're listening to this, I literally had this phone call yesterday. They were talking about, they were like, I know you got a lot of deals. And she's like, I'm very grateful to be in the deals with you. And she was like, I'm gonna put all my money with you. And because she was like, some deals are not paying out. And I was like, whoa, 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 whoa. I said, you just so happen picked the best deals that we've had and that are meeting the pref and are paying out and doing all of these things. But here's what's coming in the pipeline that could potentially affect that. And it's no fault of our own. It's not something that we could have predicted or underwritten or changed, or we have no control over it. So if that happens, are you going to look at me differently? And she goes, no, well, you told me about it. And I was like, see,
yeah,
number one rule is communication. But I did tell her, I was like, yeah, just because you're invested in two deals that are paying out does not mean all of our deals are paying out. We've been getting hit with insurance premiums that are going up. We've got bad debt that we're dealing with. We've got a whole slew, construction delays on another project, which is hurting our cash flow, vacancies, and things like that. So there's a lot of other factors that go into if a deal's paying out or not. And I'm like,
yeah,
in full transparency, not every one of our deals is paying out, but that's because it's the nature of the deal. Like it's a value add deal. The cash flow is low when we buy it. We're trying to get the cash flow up. We sometimes we get to that point and then we get hit with something we can't control, but it's no shame, or it's no like mismanagement by us or by any other operator. It's certain things that you just can't control. So I don't want to paint this rosy picture that every
no.
deal that we do is absolutely perfect, because no, we have our fair share of bumps and bruises along the way, but we're honest and we're transparent. We communicate about it.
Yeah, yeah. I think the difference there though, right, is like currently, transparency is huge, and I completely agree with that. But the what we try to do is be transparent about those things. Hey, these are the things that we underwrote to, and they're not happening. Now, the things that we underwrote to that we can control, those are
Are
happening,
happening.
right?
Right.
Right? Like we're able to control those. We're keeping an eye on them. They're working. But like one of the things that we've all talked about before is none of us have any control over the insurance rates, guys.
No.
Like we can do things to try to make sure we're going after the right insurance rates, like new roofs and making sure the renovations are right and taking care of your parking lots, all the things an insurance adjusters or underwriters going to show up and make note of. It's like, hey, we took care of that. That's fine. What I can't what I can't help is where my property is located, in terms of like east of I-95 in the Carolinas right now is starting to see insurance rates go up because of hurricanes, guys, right? Because of the hurricanes. And
Hmm.
those are the types of things you can't control. And some of those things are starting to play in these days. So, just be prepared for that. But at the end of the day, Tim's right. It's like not everything's paying, but even the ones that aren't paying are still in good situations or good positions in terms of just their equity and their value, right?
Yep.
Um,
Yep. And
so
I mean, that kind of all goes back to support the whole theory of what we were talking about today, was go
yeah,
where there's yield, right? So
right,
like if you're getting hit with insurance rates, maybe stop buying there for a little while and then go somewhere else and buy some deals somewhere, and go with where the market is going. Go where the yield is. It's very simple to understand, but it's very hard to execute. So we're just talking about it because we want to bring it to your attention. And if it's something that you're struggling with, saying, I'm just not finding any deals in my market right now, and you've exhausted every single outlet that you possibly can, ask yourself, is this where the yield is? And
right,
maybe you might be answering your own question, or you could have that conversation with a broker that you know and trust and say, hey, you've sent me 20 deals over the last 4 weeks. Nothing's even come close to underwriting. Should we, right, make it a collective thing? Should we be looking somewhere else in order to find some deals that have yield? The broker will be like, well, yeah, you never said you were open to other markets. You're only interested in this one, right?
right.
So it's that communication is important. So reach out to your brokers today and have some conversations about them with, where do they believe the yield is in markets that they're actively marketing deals.
Hey, so maybe here's one thing to leave folks with, maybe, right? And I'm putting Vitaly on the spot. We didn't plan for this. So Vitaly, a market we'll just share, right? Transparency. What's a market you like that some people might not think about?
A market that I like that some people might not think about.
I think you mentioned one
Flor-
earlier.
Florence.
There you go.
Yeah,
right?
I like
Yeah.
Florence.
All right. And folks, I'll give you one. We mentioned Raleigh quite a bit. I've said this a number of times. I'd call brokers and ask for things in Sanford, North Carolina.
Oh,
Um,
Sanford. I remember when we first met, we were looking at the 16 unit out in Sanford. We should have
yeah,
bought that place.
yeah. I would, if for those of you in the Carolinas that might be within a 4 hour drive, call and ask your broker what's in the Sanford, Pittsburgh area.
Yeah,
Yeah.
yeah. Another way good thing to look into is just look at like whatever state that you're investing into. Where is their manufacture? Where is their investment dollars flowing to? Manufacturing facilities, Greenwood, Florence. Those are two of them in the Carolinas that we like that are flowing. What's the other one? North of Columbia,
Or just up around Lugoff.
Around
Um,
Lugoff area. Go look where places where are manufacturers investing money, right? Because that's where things are going to continue to grow. Somebody else, I don't know who Facebook user is here, but Woodruff, South Carolina might be another one. Malden, South Carolina, outside of Greenville, is another market that I like a lot. A lot of good opportunity all over the place. So,
I think I could be wrong, guys, but I think Woodruff might be where that Scout factory is going. If
oh,
Facebook
okay,
user,
yeah,
I
yeah, makes
think
sense.
if Facebook user that said Woodruff, South Carolina wants to confirm, that'd be great.
Yep.
But yeah,
All right, guys. Well, we got to run. Thanks again. Appreciate everyone joining today. We'll have another fun, exciting. If anybody wants to be a guest on our show, reach out. We need some guests. We haven't done some guests in a while. We like to keep it kind of rotating between topics that we're talking about versus having guests that share their experiences and things like that. So reach out to us if you're interested in being on the show. And then if not, we will have another great episode for you next week. So
all
until
right.
then,
See,
see ya.
take care,
Peace.
guys.